All right, what's up, guys? This is Taylor. Today is Friday, March 24th, and I am live in the Simpler Free Room, the YouTube channel, and I believe the Facebook page. They got me live every which way. So, quick sound check here. Make sure we are rocking and rolling. Hey, what's up, Russ? Always good to see you, my friend. All right, guys, I don't got you for too long today, but they wanted me to jump on the mic and talk about smooth entries and exits. So we'll dive in, guys. A couple of housekeeping notes here. So on my end, in my own trading, when it comes to looking for smooth entries and exits, focus is multi-time frame alignment. All right, big word, multi-time frame alignment. Now, what I mean by that is, say for example, we look at Costco here. Costco is a pretty good example of multi-time frame alignment, meaning the indicators, the structure, the momentum, generally from time frame to time frame, it's all lined up in the same fashion. So we'll jump back to that one as a good case study here in a second. But as far as a couple of time frames, for me, the larger time frames, so a weekly chart, a daily chart, a 3-day chart, those bigger time frames just simply set the stage. So you find a daily chart with a daily buy signal, we got good momentum, good structure. That is not a guarantee we're going to get a push higher, but if anything on that larger time frame, the stage is set. Now for me, the real kicker and the real focus, that comes down to the lower time frames. So I'm a fan of the 1 hour, 30-minute, 15-minute, 5-minute, and frankly, in this market, even the 3-minute and the 1-minute can be useful. Now, your lower time frames, they're going to be the trigger. So a daily chart might set the stage for a push higher. The trigger and the confirmation, the firecracker, you could call it, to steal a term from Henry, that's going to be your trigger, right? Your hourly, 30-minute, all the way down to the 1-minute. So for smooth entries, whether we're getting long or we're getting short, ideally, guys, you want to find the setup like Costco, where on your daily chart, generally pretty solid. So here's the thing. You want to have, as a trader, you want to have 1 or 2 indicators that you can really lean into to make your trading decisions. And I'm a believer that your indicators, they should quickly give a sense of whether or not momentum is bullish, structure is bullish, or vice versa. So take your momentum and your structure indicators, and on my end, it's going to be the big 3 indicator. So of course, I'm a little bit biased, being that they're my own signals. But as far as our discussion here today, a green label or a green arrow / bar, that's your buy signal. And if you got a red bar or a red arrow, that would be the big 3 sell signal. Now, my best friend in the world, aside from my dog, is over here, and that's what I call the heat map. So you got your 1 hour chart, your 30-minute, 15-minute, the 5-minute, the 3-minute, and the Uno. And that just takes my buy and my sell signals and turns them into a color-coded background. So in the event like Costco, the background is green. What that means is that given time frame is currently printing my buy signal. And again, not so much of a focus on my indicator. What that green background is telling me is that the structure, the momentum of that chart, it's all working in the favor of the bulls, right? It's aligned for a push higher. So when it comes to multi-time frame alignment, Costco here is actually a pretty good example, where from the daily chart to the 1 hour, to the 30-minute, the 15, all the way down to the 1-minute, each of those time frames are printing that buy signal. Right? The momentum, the structure, the moving average crosses, everything working in the favor of the bulls. And what I've learned is that's how you can work some really smooth entries. Right? Don't take your bigger time frame at face value. Try to narrow in on those moments in time where your daily chart, your lower time frames, the 15-minute, the 3-minute, they're all on the same page. They're all cranking out that buy signal. They've all got momentum supportive of a push higher, and they've all got structure supportive of a push higher. Now, here's why I've learned this is so important. What I've become a huge fan of is going back and studying nice moves. All right, so as traders, we all got a couple trades in our playbook. My playbook is it's frankly pretty small. If I'm looking to get long, I like to get long in a daily squeeze. Right? I'll buy a dip to a 21 EMA and vice versa for getting short. So what I've done a lot over the last handful of months, and I do it every weekend, I do it a lot in the evening, is I like to go back and study the very moves I'm looking for. So again, a good example is I love getting long near a 21 EMA, especially if we have a daily buy signal. Now going back in my trading, coming up as a trader, my focus would generally be on that one time frame and that one time frame only. So I'd run my scans, I'd find a good looking daily squeeze, and I would just completely take that daily chart at face value. Like, yep, daily chart looks good. Everything checks out. So let me buy some calls, let me sell some puts, and I should be off to the races. But going back and looking at a lot of my previous trading, what I found was, sometimes that worked. Yeah, good looking daily chart, buy some calls, and boom. Sometimes it didn't work. And what I wanted to figure out was, well, what's the difference here? How come on Monday I get long near the 21 EMA, I got a daily buy signal, and it all works out perfectly. And then a few days later, I take essentially the same exact trade, the same exact setup, and it actually doesn't work out too well. And what I found was the importance of you got to have your soldiers lining up from the top down. So if we blow up the chart here of Costco, right, what you'll find is the daily chart sets the stage. You're above your 21, you got a daily buy signal, perfect. Now the stage is potentially set for a big push higher. What's going to trigger that push higher, though, is your structure and your momentum lining up across all your lower time frames, right? All the way from the ground up. So what I like to study are the lower time frames on those bigger pushes. So you look back here at Costco, and sure enough, during that push, your 1 hour chart is pumping out a bunch of buy signals, right? You had alignment to go along with your daily chart on your hourly chart. All right, we take it down a notch and check out the 30-minute chart. And sure enough, right, before and during that big push, you got your 30-minute chart doing nothing but pumping out a bunch of good-looking buy signals. So to me, that's a benefit of the heat map where I can run my scans, I can look for those bigger time frames that potentially set the stage, but then all I got to do is take a quick peek at my pal over here, and pretty quickly I get a sense of whether or not my 1 hour, my 30-minute, if all the soldiers here are lining up for a push higher. And sure enough, I go back and look at all my trades I've done in the past. The winning trades all have this in common. It wasn't just a good looking weekly chart. It wasn't so much a good looking daily chart. It was the fact that from head to toe, everything was completely in alignment. Your weekly chart, your daily chart, they're on the same page as the 30-minute, the 15-minute, the 5-minute, etc. And more importantly, I'm going back and looking at all the trades I've done over the years, and the ones that didn't work, regardless of how pretty that bigger time frame might have looked, the ones that didn't work all tend to have one thing in common. And what they have in common is you're missing that alignment. Meaning, yeah, your daily chart looks good. You got a squeeze, you got a buy signal, but then you check out your lower time frames and they're a total mess. Daily buy signal, but the hourly is bearish. The 30-minute 15, they're pumping out a sell signal. So now you have this tug of war versus everything being on the same page. So what I want to do with you guys here, and we'll make it fun, I'm going to crank up the scans, and I'm going to do the scan here for a daily squeeze with a daily buy signal. So as far as setting the stage for a push higher, this is probably my favorite scan. So we're going to crank this puppy up. And let us take a quick screenshot here. So at the moment, out of all the stocks in the market, we only got a few here printing out that combo. Daily squeeze plus that daily buy signal. Now, what I love so much about that combo is it's the marriage of compression and probabilities. So what does a daily squeeze give you? Well, it gives you compression. The stock is taking a bit of a breather. It's catching its breath. It's gearing up for that next big push. What the daily buy signal tells you is structure, momentum. It's all working in the favor of the bulls. So being that trading is a probabilities game, you find a daily squeeze printing a daily buy signal. The probabilities already kind of lean towards that squeeze probably fires to the upside. But the trigger, the confirmation, has got to come from all your lower time frames, rocking and rolling. So for those of you here on YouTube, Facebook, in the free room, right, and you don't even have to understand the indicator, right? Just understand green is bullish, gray is neutral, and then red would be bearish. And the poster child for a good example of alignment would be something like Costco. The daily chart checks out, the hourly, the 30, the 15, the 5, even the little old 3-minute chart. Right? They're all on the same page. So rapid fire here, guys. I'm going to call out a few different names. And I want you to say yes, right? The letter Y, if you think it's a good example of alignment, or no, if it's not quite perfect. All right, rapid fire here. Coca-Cola. What do y'all think? We're just focusing on pretty colors here. That's it. Coca-Cola is a pretty good example. Now, we should aim for perfection in the names that we trade. So my only knock here against Coca-Cola, if you guys peek up here at the time frame labels, we've got a weekly sell signal. So that's the one issue here on Coca-Cola. Your weekly chart is not on the same page as your daily, your 1 hour, your 30, your 15, and your 5. So not the best example of alignment from head to toe. But if we're going to focus solely on a daily chart, right, and our interest here is trying to catch that daily squeeze firing to the upside, well, in that example, yeah, this is a pretty decent one. Your daily chart, your hourly chart, 30, 15, 5, they're all on the same page, right? The pretty colors are telling you momentum on the MACD, the structure in your moving average crosses. For now, it all works in the favor of the bulls. So playing that probabilities game, the daily squeeze gives you compression. We're gearing up for a big push. The daily buy signal already gives us a sense that there's a better chance this thing must have fired to the upside. The confirmation is coming from all these guys over here, right? They're all on the same page. The 1 hour, 30, all the way down to the 5. Now, admittedly, it'd be even better if the weekly chart wasn't bearish. So maybe we can do a little bit better than Coca-Cola. All right, next up is going to be McDonald's, one of my favorites. What do y'all think here for Mickey D's? Like rapid fire, guys. Rapid fire. What do we think? Yep. All day long. All day long. The weekly chart is neutral, so it's not going to help us or hurt us. But again, if your focus as a swing trader is, hey, I like taking daily squeezes for a ride, well, here you go. You got your compression. The daily chart already leans bullish. And as a general statement from the ground up, everything's kind of on the same page here. You got the 30-minute crank in, the 15-minute, the 5-minute, and the 3-minute. So pretty good example there. Next up, guys, is going to be TXN, Texas Instruments. We can do a little bit better, right? It's not awful. Right? There's not huge warning signs here. It's a little bit eh. All right, my weekly chart, that's bullish. My daily chart is bullish. So the stage is potentially set here. But what's going on in my 1 hour chart? Well, right now it's kind of going through an identity crisis. It's neutral. Not really aligned for a push higher, not really aligned for a push lower. It's just a little bit lame. Then my 30-minute chart tells me we're bearish. My 15 is neutral. My 3 minutes neutral. These guys are bullish. All right, just compare that to Costco. You don't have any mix match over here in Costco. Couple buy signals, couple sell signals. No, they're all green. You got nothing but green beans in your garden. We'll do one more here. TTD. No. All right, not good enough. Is the stage set for a push higher? Yeah, you better believe it. But guys, if we were to buy calls on TTD today, what are we looking for? And ideally, what are we looking for almost immediately? Like if not a day or 2 days later. Well, we are, of course, looking for a push to the promised land. Looking for a big push to the upside. So here's what I like to do. Here's a good example a few months ago of the very move we would try to catch today. Like that's all I'm looking for. If I buy TTD today, I want to push just like this. And I want that as quickly as possible. So what do? You go back, study that move. But you're not trying to study your daily chart. Right? Where's the context? If anything, your daily chart today looks a little bit better than it did back there. Right? Got a little bit of a trend going. So what's going to be the difference? Well, let's go back and study that move. What's going on the 1 hour chart before and during that big push? Oh, look at the indicator. Right, nothing but hourly buy signals. Okay. How about a 2 hour chart? Spice things up a bit here. How about the 2 hour? Right, and what do you know? Before, and that's really the key, guys, before. Right, a lot of indicators are going to be bullish after a stock has rallied for 2, 3, 4, 5%. Right, we're trying to get positioned before that big push. We're trying to get paid on the easy part of that move. And sure enough, before and during that big push, your 2 hour chart is bullish. Okay, how about the 30-minute chart? And what do you know? Right, nothing but buy signals. So there's your template. Right, trying to catch a big push off a daily 21, trying to see a nice daily squeeze fire to the upside. The template for that move is alignment on all your lower time frames. In a tenth of a second, we can take a look at the heat map and quickly say, well, it ain't that moment in time just yet. So getting long TTD today with the same expectation, right, of a move you had back here doesn't make any sense. If you're taking your daily chart at face value, yeah, I guess so. You got a squeeze, got the green bean. That's the real kicker. Back here, everybody lined up, everybody reporting for duty. My 4 hour, my 2 hour, the 1 hour, the 30-minute, they say, let's get the party going. This time around, yeah, the daily chart is still nice, but my 30-minute, my 15, all the way down to the 1 minute, well, now they're communicating the complete opposite. It's a path of least resistance thing. If on a daily chart down to a 1 minute chart, everything's lined up for the path of least resistance to be to the upside, well, it's just about as good as it gets. This is more of like a tug of war. Yeah, these guys look good. Not so much here from the ground up. So really basic stuff, guys, but I wanted to talk with y'all about this today because when I came up as a trader, my focus was very much on that one time frame kind of thinking. Like, hey, I'm going to put my cash to work here based on the weekly chart and the weekly chart alone. Or I'm going to put my cash to work here based on the daily chart and nothing but the daily chart. But that didn't bring the consistency I was looking for. And here's a real kicker, especially in a market like this market. You don't have to do all this multi-time frame hunting if we're back in the 2020 kind of trend. Right? A little bit tongue-in-cheek, but yeah, you're back in 2020. Wake up, buy a dip, go to the beach for a week, work on your tan, come back a week later, and you probably got some cash to your name. Well, obviously, we are not back in the 2020 kind of market. So the frustration on my end, going from the easiest market I've ever traded to a much more difficult market, that frustration forced me to improve my game to this point where now I'm trying to look for alignment all over the place. And that's what tends to work a lot more in a difficult market and in an easier market. Now, the same rules apply here for looking for a short. So I'll take you guys through a few shorts here, and then I will go through the questions we got. But let's go see. Daily squeeze. All right. So here's some daily squeezes printing a sell signal. See what we got here. Raytheon, ZTS, Duke, MPC, Oxy. All right, let's look at a few of these puppies. Now, if we're trying to get short, what are we looking for? Momentum, structure, from the ground up, all working in the favor of the bears. Right? You want as many sell signals as possible, not that big game of tug of war. So we'll check out a few of these. All right, and same thing here, guys. Now we're looking for red. So rapid fire here. First up is Raytheon. And mind you, I'm doing this exercise with you because it doesn't have to be the big three indicator, but based on the tools you lean into, your decision-making process should be like a split second. Like this has either got everything I'm looking for or it doesn't. If it doesn't, well, guess what? I'm going to move on and find another one. All right, Raytheon. Not really screaming at us, right? Now you got a daily squeeze. You have a daily sell signal. So yeah, the stage is set for a big flush lower. But my 1 minute and my 5 minute are bullish. All right, my 3 minute, my 15 are neutral. Not something we would look to get long, of course, but not perfect. Right, we can probably do a little bit better. ZTS. Yeah, it's just okay. The weekly chart and the daily chart are not in alignment. So frankly, guys, that's probably where I typically would stop the discussion. Right? If my larger time frames are going to set the stage for a directional move, well, then what do I make of this? My weekly is bullish, so that tells me everything's geared up here for a push higher, but my daily chart is telling me the opposite. So a lot of times, if you don't have the alignment on your bigger time frames, don't even bother looking at a 1 hour, a 30 minute, a 15. Right? Let them play that game of tug of war between a weekly and a daily. And then when you have alignment on those time frames, all right, now we might be able to get to work. All right, a couple more here. I think you guys get it. MPC. Not perfect. Not terrible, but not perfect. What else we got here? We got Oxy. Now, Oxy's the kind of thing I'd say, all right, let me keep a really close eye on this, right? My weekly chart, bearish. My daily chart is bearish. My 1 hour is bearish. But all these other guys are a little bit quiet, right? No warning signs, no buy signals. It's a little bit neutral. So imagine an hour from now, a 1 minute sell signal joins the party, a 3 minute joins the party, a 5 minute joins the party, right? You're kind of getting towards that moment in time where from the top down, everything on the same page. So basic stuff, guys, but at least for me coming up as a swing trader, that was not my approach for 6 to 8 years. First 6 to 8 years of my trading was just very much, hey, how's a daily chart look? All right, I'm going to take that and run with it. What I have learned, though, is this is, for my style of trading at least, this kind of thinking and this kind of focus on, let me make sure it's all lining up in the same direction here, has been really, really helpful. So if y'all have got any questions on any of that, feel free to throw it at me in the chats here. But that's my advice, guys, right? Two pieces of advice, really. Right? Advice number one, have a couple, right? Maybe one or two indicators that you focus on for every trade. And then two, and I'm serious, guys, do this weekend. Like I promise you, your game will improve. Study previous examples of your playbook trades across all time frames. So say one of your favorite trades is you love trading an hourly squeeze, right? You can take this mindset and apply it to a lower time frame. So if one of your favorite trades is an hourly squeeze, well, I want you to go back this weekend, go find a bunch of examples of great looking hourly squeezes that worked, and then find a few examples of hourly squeezes that did not work. And what you'll find is the same theme. What's really going to cause that hourly squeeze to fire to the upside? It's all the time frames underneath it, right? The 30-minute, the 15-minute, the 5-minute. It's those time frames being in full alignment. And we can actually look for a few of those. All right, so let's crank the scan up here. And Lorna or Mirza, let me know if anybody else is coming up here after me. I don't want to gab for too long. But check this out, right? You can do it on a lower time frame. So scan a squeeze. Let's say your favorite trade is the hourly squeeze. So we'll look for a few hourly squeezes here. And if they got the buy signal, that will set the stage, of course. All right, what do we got? Got anything here? All right, cool. We got a few. So now take the same exact mindset. The hourly chart sets the stage for a push higher. Your trigger will be your time frames underneath it. So I'm going to go look at Eli Lilly on the 1 hour chart. And now I'm going to look for alignment on my 30, my 15, all the way down to the 1 minute. But they all got to be lined up on the same page. So Eli Lilly. Yep, not bad at all. Inside of my hourly squeeze, my 30-minute, my 15-minute, my 1 minute, they're all bullish. Right? Pretty good example. McDonald's. Yeah, inside your hourly squeeze, not too bad. The 30, the 15, the 5, they all cranking. What's that? SO. Not too bad either. You get a 1 minute sell signal, so maybe wait until that kind of cleans up, but not too bad. All right, BTU. Oh, now we're talking. 1 hour, 30, 15-minute, 5-minute, 1 minute, all in alignment. So for those of you here in the free room, let me see. So here's what I'm going to do, guys. And for those of you watching on YouTube, those of you on Facebook, head to simplertrading.com. Check out the free room. I'm in there 2 or 3 times per week. A lot of the other traders in the roster are in there. But my gift to you guys here in the free room is I'm going to put all my scans here into the room drive. So I got scans for my buy signals, scans for a squeeze plus the buy signal, scans for a sell signal, scans for a sell signal and a squeeze, and then a couple more here. So I will open it up for questions, guys, assuming I am not out of time. But I'll put that in the room drive for y'all shortly after. All right, now, Doll, you're looking at AI. So let's pull up AI here. And if you guys got any charts you want to look at, let me know. Okay, so here's a good example. The stage might be set. The weekly chart is bullish. The daily chart is bullish. But where's the confirmation? 1 hour chart neutral. So that doesn't really give you a sense of anything. 30-minute neutral, 15-minute neutral, 5-minute bearish. I would step back, wait until things are fully aligned. Now, if we buy calls here today, what are we looking for? Well, we're looking for a little bit of action like you had back here. And we want that action as quickly as possible, right? Get in, catch the move, get the heck out of there. So not to be a broken record, but what's my 1 hour chart doing before and during that pushback there? It's bullish. Well, right now it's neutral. What's the 30-minute chart doing before and during that big push? No, you got a whole bunch of buy signals. Right now it's neutral. So point being, you can't buy it now and quite expect the same move as you got back there until things are fully aligned. All right, Rocky has got some PG. We'll look at PG. We'll take a look at SPX. If you got any questions here on Facebook and YouTube. Yeah, Deontay, I'll put my email here in the chat for you. Right, Taylor.Horton at simplertrading.com. Yeah, if you have the indicator and you want the older version, shoot me an email. I'd be more than happy to send that to you. You want to play around with both, or see which one you prefer. But yeah, absolutely. All right, Procter and Gamble. Now, for what it's worth, guys, there's also such thing as a good entry. So, the best example of this would be Nvidia from yesterday. We all know Nvidia, right? Yeah, sure enough, yesterday at the high of the day, this thing's locked and loaded from head to toe. Like the weekly chart, the daily chart, the 1 minute, they're all cranking out the buy signal. So to be clear, that doesn't mean I'm always going to take the trade. I want to look for alignment, but I also want to fight for a good entry. And as a rule of thumb, that far above the daily 21 EMA, kind of feel like I might have missed the easy part of that move. So when I look at Procter and Gamble here, I just think I'm a little bit late for a good entry. But you have that alignment, daily chart, 1 hour, the 30, the 15, right? All pretty good. One of you was asking for the S&Ps here. The S&Ps are trying to fight themselves out of a paper bag. My weekly chart is neutral. And it's been bullish this week. It's been bearish all over the place. But that's neutral. Right? Doesn't really give me too much to work with. My daily chart is neutral. And my 1 hour, my 30 minute, my 15 minute. So while, yeah, you got a couple of lower time frame buy signals, again, I like for the bigger time frame to set the stage. And neutral on the indicator, not really setting the stage for all that much. If anything, it's more of the same. We're up, we're down, right, we're doing a lot of barking, not too much biting. Now, Rodney, AMD, very much like Nvidia yesterday, and this thing's just nutty. So here's what I'm looking for, really. At the end of the day, I'm trying to find that moment in time where everything's lining up to catch these moves away from the 21 EMA. So yesterday at the high of the day, yeah, AMD is locked and loaded. Weekly chart all the way down to a 1 minute. I'm not going to trade it up there for a swing trade. I got the alignment for a push higher, so I'm sure as heck not going to short the thing, but I want to fight for a good entry. So the core of my swing trading strategy is to find these moments in time and try to get my paycheck by catching the move away from the moving average. And my God, talk about a poster child. The weekly chart, the daily chart were bullish. The 4 hour chart was bullish. As I'm sitting here looking at it, I don't know why I didn't put my whole account in AMD. The 2 hour chart, bullish. The 1 hour chart, bullish. The 30-minute chart, you guessed it, bullish. So if I could give you guys like the perfect example of what I want to live and breathe as a swing trader, it's AMD. The daily 21 EMA is my buy zone. My weekly and my daily buy signals set the stage for a push higher. But then the 4 hour, 2 hour, 30-minute, 15-minute, 5-minute, they're all loading on up there. Like it does not get much better than that. So that's what I'm really after, right? That moment in time. But I'm trying to put that idea to work as close to that 21 EMA as possible. Now my thinking a bit more is, all right, I've missed the easy part of the move. I'm not going to force the issue. So now what do? I'm going to wait for a pullback to a reasonable entry level. Now, do I buy the pullback blindly? No, absolutely not. I'll wait for a pullback. I'll fight for a better entry. But when am I going to pull the trigger? Only when I got that alignment from the ground up. Right now, you'll notice we're overbought. And you're kind of getting signs of exhaustion here. Right, the 1 hour chart ran out of gas. 30-minute chart goes bearish. 15 minutes neutral, 5 minutes neutral. Not really quite packing that punch. It was packing all throughout that big push. So not to say trading is easy, but there's such thing as easy money and then a hard dollar. If you can find that alignment from the ground up, somewhere in the neighborhood of that 21 EMA, what you're doing is putting yourself in a position to catch the easy part of that move. We end up 2, 3, 4 average true range moves away from that daily 21. Even if you have the alignment, it becomes a harder dollar to make. All right, now you're fighting this growing probability that sometime very soon, we're going to come on back down towards that moving average. All right, so you're trying to play the ebbs and the flows. Everything locked and loaded back here. Build your position near the 21. Catch the push higher. Then get the heck out of there. Wait for a pullback. Do it all over again. Get the heck out of there. Wait for a pullback. Rinse and repeat. All right, couple more here, guys. ASAN. Yeah, Joe, man. What I can do is let me grab you my video real quick. So I put a video out on my YouTube channel the other day talking about some of the changes to the indicator, the tweaks, the additions. So let me grab that for you here. There I am. Look at that, guys. 1,000 views. My God, I'm famous. How am I going to stay humble with all this fame? I put the link in the chat for you, and then I'll do that here for the good people on the YouTubes and the Facebook. And now, for those of you that have the indicator, this flexible grid is on the indicator page. So you get the heat map, the histogram, the main chart, the labels, all that pretty stuff. All right, guys, a few more here for the good peoples. Oh, Jay, you already know it. You already know it. All right, ASAN. Well, I wouldn't look to buy the dip just yet. Notice today how the daily chart's gone neutral. No more green candle, no more green label. Just tells you your daily chart's a little bit tired. Better way to word it, the easy part of that move now is probably done and over with. So from here, I look for a move back down towards the 21. I'd look for some stabilization near the 21 EMA. And then again, I'm looking for that moment in time. Daily chart goes green. My 1 hour locked and loaded, 30 minute, 15 minute. That's the kind of thing you're looking for right there. Matt, what do I think about NVIDIA? From a risk versus reward perspective, I like John's trade. So for those of you on Facebook and YouTube, in the options room today, JC, that's John Carter. You might have heard of him. I think he wrote a book or something. John opened up a put debit spread on NVIDIA. So yesterday, that trade makes no sense. Why did it not make any sense yesterday? And mind you, he put the trade on today. So he put the trade on when it actually makes some sense. It didn't make sense yesterday because regardless of how overbought we are, they kept on pumping it, right? The 1 hour, the 30, the 15, they kept on going. Now what you're getting today is finally signs of exhaustion, right? The bulls might have finally shot their load here. The 1 hour chart goes neutral. 30 minute goes bearish. The 15 minute, the 5 minute, right? Things are getting a little bit tired. So from a risk versus reward perspective, right? Wait until something is overbought. Wait until all your lower time frames kind of throw in the towel. Yeah, you can short it. I put my exit right back above the high. So it's a little bit of risk here, and your reward might be a 20-point flush back down to your daily 21. Right? And I know it might sound crazy, like there's no way NVIDIA pulls back $20. Well, that's always what it feels like after a huge push. But the golden rule, every market, every stock on every time frame at some point is coming back home to that 21 EMA. Right? It's like a good child. You might leave your house, you might go adventure the world, but you always come back home to see mama every now and then. So yesterday, no, I wouldn't like that trade. This thing's just on crack. Like, no stopping it. Today, lower time frames all telling me, hey, we're a little bit tired here. Right, we've given you guys a 100-point rally in the last handful of weeks here. Now we're a little bit tired. So yeah, I think with the stop above the high, I don't hate that trade. I do not hate that trade at all. Yeah, Aaron, exactly. It's a technical term. It's a technical term. But all right, guys, any last questions here? Otherwise, we put in some good work this week. I want to take a look at the market real quick here. What do we got? Yeah, so we got these 40-25 call credit spreads right now. It's an interesting market, man. I mean, you go through the market. You got energy, totally busted. A deathly looking daily chart. You get the financial sector, totally busted. Weekly sell signal, daily sell signal. Healthcare is a total mess. The industrials, the transports, right? They're a total mess. You got IWM fighting for dear life down here at 170, but your weekly chart's bearish, your daily chart's bearish. You got all this destruction out here, right? The Dow's kind of eh. So typically you would think, all right, well, if energy, the transports, the financials, healthcare, industrials, the Dow, the IWM, if they're all breaking down and getting slammed and they got sell signals and busted the structure, well, typically you would think the S&Ps are kind of quickly heading lower. And that's not quite the case. Reason being is you got 4 or 5 names keeping the ship afloat. It's really impressive. They're doing everything they need to do to keep the market above water, despite financials, energy, everything else kind of throwing in the towel. So as far as next week, guys, that's like my major focus. For new trade opportunities, for the management of my call credit spread, the only thing for now keeping me from making money on that S&P short is you've got 5 names that make up 20% of the S&P 500, keeping things alive, right? It's Microsoft, like super strong. Google, I think crazy strong. AMD, of course, has been a nut job. You get the beast formerly known as NVIDIA. Apple, can't forget the Big Apple. Like these are the names that can keep everything intact. And I'm going to show you guys real quick here before we leave. A nice little resource is etfdb.com. Go here, type in any ETF. We will pull up the old spiders here. And this quickly gives you a sense of why isn't the market falling apart? Even though energy, even though healthcare, financials all look terrible. Your top 5 names make up more than 20% of the entire S&P 500. Like, think of that. There's 500 stocks in this basket. 5 of them, that would be what, 1/10 of them, make up 20% of the whole thing. Procter & Gamble does not matter as far as moving the market. Visa does not matter. Johnson & Johnson, JP Morgan, doesn't matter. Exxon, doesn't matter. Apple, Microsoft, Amazon, NVIDIA, Google. They matter. So regardless of all the nastiness elsewhere, if they keep going up 2% every day, just makes it a tough market to be short. Tough one indeed. Now, in the event, they throw in the towel, and even if they came back to a daily 21, I'm not looking for Microsoft to come back to 220, But man, if they could just even take a chill pill, come on back down towards a daily 21, it would do us so many favors. One, we'd probably end up making some nice money on our short. But two, hey, guys, we might want to look to buy Microsoft. You might want to look to buy NVIDIA. So that pullback is going to give you a better chance to do so. Better chance to do so. All right, Tony, that's what's going on here. I was wondering why they're not pulling back yet. Turns out my man Tony from Chicago is still long. So, Tony, you got to do us all a favor. Before you pull the trigger, before you take your longs off, you got to let us all know. Because as soon as you pull the trigger and you're out, we're going to limit down the next day. And then, Rodney, the big 3 RTM, so that lines up with these little arrows I built out down here on the big 3 histogram. So let me go find a good example of that for you guys, and we'll call it a day here. Actually, before I get in the free room, I'm going to give you guys my my scans right now. Let me do this before I forget. All right, big 3 scans. All right, there we go. So for those of y'all in the free room and everyone watching on YouTube, check out the free room, and then in the room drive, which would be this little folder icon up here in the top right-hand corner, that bad boy right there. Open that up, and you'll see the Word document containing all my scans. So one of those scans, right? I like to look for 2 trades. 80 to 90% of the trades I do, we're trying to catch that move away from the 21 EMA. So squeezes and buy signals or squeezes and sell signals. But I am a fan of trying to catch the move back home to the 21, right? Reversion to the mean. So on the overbought scan here, I've got nothing on the daily chart. We'll do a 1 hour. They don't tend to print too often, which I kind of like. Okay, there we go. So Rodney, those labels here on the heat map, they just line up here with the overbought and the oversold signals. So RTM stands for reversion to the mean. So on the 15-minute time frame, Activision, EA Sports, and a couple other goofballs here. So what that scan or that label tells us, on that time frame, the stock is extended and momentum is going in the wrong direction. So that's those little arrows down here. All right, that tells me that we're more than 1.5 average true range moves above our 21 EMA. So we're in the neighborhood of potentially being a little bit cooked. And then momentum, no longer bullish. Right, you get a big push higher. You ran away from your 21 EMA. But now, as you're still a little bit extended, momentum going in the wrong direction. And if they can't quickly take momentum on the MACD and pop it back over the 0 line, usually a decent indication they might be trying to take it back down to that 21 EMA. So that little red label, that's all that's telling you. We're a little bit extended, and momentum is not supportive of us going further and further away from the 21. Now, let's keep that discussion going real quick in terms of alignment. Would I look for a short right now on my 15-minute chart? Based on the overbought signal? No. Well, why not? Because my 5-minute, my 3-minute, my 1-minute, they are not on the same page. If anything, they're telling me, yeah, you probably keep the party going. They probably take momentum. They probably rip it back above the 0 line. They probably keep on pumping it. But now imagine instead, we get the overbought signal on the 15-minute chart, and then my 5-minute, 3-minute, 1-minute go neutral. They also run out of gas. Imagine instead if my 1-minute, 3-minute, 5-minute actually gave us a sell signal. Right? Every directional move you're looking for, there should be some kind of template on your lower time frames to support that idea. Otherwise, you're blindly getting short here while everything is still cranking. So that is that, Rodney. But listen, guys, thank you for all your time this week here in the free room, the options room, my mastery. For those of you on Facebook and YouTube, thank you all for being a part of the community as well and being subscribers. And if you guys need to reach me, you got any questions, comments, complaints, I am here for all the above. So my email is Taylor.Horton. Here's a who. Taylor.Horton at simplertrading.com. So if y'all got any follow-up questions, you want to chat about anything, you want to talk about the current status of the NBA, I'm up for all that. But guys, thank you for your time. I appreciate y'all showing up every day, putting a little bit of time into your craft. Have a good weekend. Be safe. Take your dog for a few walks. And we're back on Monday to do it all over again. So thanks, guys. I'll talk to you soon.